Hello, my dear students. This is Anusha Banu, belongs to the PG Department of Commerce. I'm going to introduce the subject called Banking Theory, Law and Practice, according to the syllabus given by the University of Madras. Let's get into the subject. Have you ever wondered that how concept of banking came into existence? Well, it's a story that deals with the ancient civilization. Temples used to safeguard the gold, grains, valuables, which eventually helps to develop the economic system of the country. They also deals with deposits, loans, and even exchange rates were established there. Fast forward to the Middle Ages, the Knight Templar introduced the system that allowed pilgrims to deposit funds at one temple and receive the same funds in another temple. Now we are calling the same function is called bank transactions. Because of the Industrial Revolution, banking took a leap forward with the establishment of central banks, joint stock banks, and the concept of bank notes were introduced. Now we are going to discuss about the banking structure in India. We have many kinds of banks called small banks, payment banks, commercial banks. Payment Bank is a new model bank which is introduced by the RBI and set up to provide a small level of savings account and remittance services to low income households, migrant labor workforce, and small business group peoples. A small banks, in the other hand, are entitled to that provide whole suite of basic banking transactions for the small level industries and other unbanked sections, accepting they are also accepting deposits and lending loans to the public. Commercial banks, the big players are classified into scheduled and non-scheduled banks. The perform numerous functions from accepting deposits, lending money to the issuing drafts. They play a crucial role in the country's economic development. Then we have the central bank, the Reserve Bank of India, which supervises all these activities and maintain exchange rates, ensure financial stability, provides banking services to the government. Banking has evolved significantly over the centuries, becoming an integral part of the India. From temple to digital platform, the journey of banking is very long, of course, for the economic development of the country. Can you guess who govern all these banks? Yes, of course, RBI and SBI. And the SBI is the oldest bank, which is the root from 19th century. It also called as Imperial Bank, and Bank of Calcutta is the starting point of the SBI in 1806. It's just not a bank; it's an institution with the heavy weightage, heavy long history. It has a traditional banking. SBI is also expanded into non-banking sectors and showcasing its uniqueness. And next, talk about the cooperative banks. The cooperative banks managed by their own members, and it operates the principle of mutual assistance and are pivotal in the promoting of financial conclusions. Then we have non-banking financial companies, that is NBFCs. These institutions crucial as they complement banks by providing financial services that bank may not do. But who keeps on eye all these? Of course, RBI. RBI is the central bank of the country. RBI wears many hats. It formulates, implement policies, regulate financial markets, and ensure financial stability. RBI also spreads various financial sector reforms. For example, Sukma Chakravarti Committee 1985 and Narasimhan Committee 1991 and 1998. All these committees shaped the landscape of banking. They given some form to the banking and including capital adequacy norms, prudential norms, etc. Of course, all these to maintain the healthiness of the banking system. Prudential norms are the norms the bank must adhere to the norms to safeguard the financial sectors, and capital adequacy norms a bank requires to maintain certain risk weighted assets crucial to protect depositors and ensure the overall stability of the financial system. And the institutions play a crucial role in regulating a banking operation in India. But maintaining balance between customer service and regulatory compliance, RBI rules and regulations, SBI rules and regulations is biggest challenge for the banking of course. Now we are going to discover the online banking, e-banking or electronic banking. It has several types of services, and starting from the accepting deposits to transferring funds, applying for the loans. Without visiting the bank branch, we can sit in a home and relaxly we can transact our money. It has made banking more accessible, efficient, and very convenient to the customers actually. We should thank our financial institution for giving us a better banking experience for this actually. E-banking infrastructure has evolved rapidly. It gives a user-friendly experience actually. And the internet banking allows you to perform banking activities on your own computer, laptop at your fingertips. You can use it. Available around the clock actually, and offer numerous services like fund transfer, bill payments, and account transactions. Mobile banking also takes an important role in the society right now. It allows you to sit back in your couch in the home, and you can easily transfer your funds with your friends. And electronic mobile wallets are plays a vital role in the society right now. A virtual wallet stores your money digitally and let you make online and offline payments in the jiffy. And ATM is the automatic teller machine, a physical manifestation of e-banking, and it allows you to withdraw cash, deposit money, and it performs. You all know that 24 into 7 it's working. The concept of electronic money refers to the money that exists only in the internet, only in the electronic devices actually. It stores electronically the money and given services. At last, we are talking about electronic fund transfer system. It's a method of transferring money from one account to another account in a very quick mode, very safe, very convenient to perform banking activities like transactions. We can easily use those functions. Now I'm going to talk about opening a bank account. It is an essential thing which is maintained by the bank for a customer actually. The bank has different types of accounts including savings account, current accounts, and fixed deposits accounts. Each the account has its unique validity and values and unique features it has. Choosing a right type of account, filling out form, and providing necessary identification of documents is a major thing which should be followed by every customer. And a customer should also maintain a minimum amount required by the bank. A savings account is an account where a normal customer can open for an daily needs, and the current account is for the business people, and FDR is for the written purpose. You can deposit money for a fixed period of time and earn back the interest. Donatio mortis causa. It is a Latin word, a gift made at the time of death. And banking is often related to transfer of account ownership, and passbook booklet provided by the bank that records all the transactions made in that particular account, and we can easily track the financial activities done by the account holder. And bank customer relationship is a smooth relationship, a legal relationship where the banks agrees to accept deposits and provides all the facilities given by the bank. Next, we'll talk about bank lending. A bank lending includes accepting deposits. It follows certain principles and procedures, including through a loan evaluation process and assessing the borrower's credit worthiness of the customer, security of the loans, and various factors were influencing the bank lending process: economic conditions, interest rates, and the borrower's financial status. Finally, negotiable instruments. These are the documents guaranteeing the payment of specific amount of money either on demand or at the set time in the payer's name. Bank account and lending are the backbone of the banking operations, facilitating financial transactions where your student, professional, business owners. Understanding these concepts may help you to do a better banking. Finally, I'm going to talk about the word called endorsement, a complex word. It is a legal term that refers to the act of payee signing their name on back of the check or bill of exchange or promissory note. These actions allows the legal transfer of these financial instruments from one party to another. The endorsement signifies that the endorser guarantees the payment if the issuer defaults or fails to pay. There are several kinds of endorsement, each with the specific rules and implications. Simple form is a blank endorsement where the payee signs their name only. Effective makes the instrument payable to the bearer can be transferred simply by delivery. But the full endorsement includes the payee signature and specify the person to whom or to whose the order instruments is to be payable by the person. There are also restrictive endorsements which restricts the further negotiations of the instruments. But what happens when the check is dishonored? It is occurred when the bank refuses to pay the amount. It may be because of many reasons. A signature is not valid, insufficient fund may be there, and the check is outdated maybe. reason for disowning. Next is cross check is check that has been marked as specifying an instruction about the check, and it is allowed to deposit the amount directly into the bank account of the payee and not provide cash for such checks. Collecting bankers play a significant role in the banking process. Their duty is to collect checks, bills, and other instruments deposited by customers for the credit of their worthiness. And lastly, we'll cover the topic of customer grievances and the role of banking ombudsman. Ombudsman is a senior official appointed by the Reserve Bank of India to address the customer complaint against deficiency in banking system. Endorsement plays a crucial role in ensuring the validity, security of banking transactions. With this, I'm signing off. Thank you.